BlackRock out with fourth quarter and full year results this morning. The stock right now on the back of that news. Let's show you where things stand because the world's largest asset manager now overseeing $11.6 trillion under management. Beat the top and bottom lines. The stock up about a little over 2% right now. In the fourth quarter, BlackRock generating $281 billion in net inflows. And I ended up speaking to BlackRock Chairman and CEO Larry Fink in an exclusive interview and asked him about the factors that appear to be driving the performance.
We announced 3 mergers in 2024. We spent $27 billion in acquiring these 3 firms. Generally, when you're doing mergers, clients pause. They want to see what the firm looks like. They want to understand what does it mean for them. And our job is to try to tell them what everything means to them. So in the context when we did 3 remarkable mergers, we had a record amount of inflows from clients. So $641 billion of net inflows, $241 billion in the last quarter, over $360 billion just from the U.S. alone over the course of the year, across every segment in the world, whether it's passive, active, index, alternatives. We had a really great flows. And what it translates into, clients are believing that BlackRock could help them and provide more for them.
Okay, but what do you think you're doing? Meaning, this money is coming in at a time where it's not being, evenly dispersed to all the asset managers in the world, right?
No, but I think what's going on in the asset management industry is true in most industries. Clients are doing business with fewer organizations. You see that in retailing. So let's look at, Walmart versus so many of their competitors. Their market share really improved over the course of the year. I think what's going on is if you could provide more and if you have the scale to providing that with your clients, and clients will reward you with that. And I do believe our penetration with clients worldwide, from cash management to long duration assets across the board, fixed income and equities and alternatives, really just gives us that differentiating model. Now, we are the #1 firm in ETFs. We're the #1 firm in investment technology through Aladdin, where we had 12% organic growth in that. On top of that, we had 7% net new fee growth. So every metric, as you suggested, was a record moment for us.
We're going to get into a lot of other issues, including the issues of woke and unwokeism and climate. We don't get too deep on the Bitcoin topic, but we get into a whole conversation. Well, we get into a conversation of the markets, which we're going to have to see in just a little bit. But we do get into a conversation about insurance, because one of their big clients are insurance companies, as it happens.
Insurance companies and reinsurance?
And reinsurance companies, exactly. And Fink, we should mention, is a native of Los Angeles. And I asked him about what he thinks of these devastating wildfires and not just the personal, but also economic cost.
As a Los Angelino, it is horrible to watch. I mean, I used to hike the Santa Monica Mountains all the time. It was one of my pleasures of growing up, actually looking for snakes and reptiles as a kid, walking through the chaparral. And I was there during the Great Bel Air fire. So, we've always had fires in Los Angeles, but you've never seen the destruction like this. Maybe we're going to have to redefine, event risk throughout so many parts of the country. And it's going to be a big issue in America, the role of homeowners insurance. And homeowners insurance is becoming a larger and larger component for home ownership. And I think this is going to be an issue for government going forward. And, I think this is going to be one of the bigger issues that are going to be that we're going to have to be tackling over the next 4 years. But, when you have whole neighborhoods destroyed and you have infrastructure and schools and supermarkets destroyed, this is not a 1-year fix. This is going to be 5, 6, 7, maybe 10 years of fixing.